Hi, Jeff Wright with Foundation First Property Group, and this video we're going to be talking about the Schedule E. This is going to be the form that most people will be using to file explaining their rental income and loss. Now, if you are filing as an LLC, you're going to be using Form 8825, but most people, I think, are going to be using the Schedule E. So I just wanted to do a quick video to show you what a Schedule E looks like. Oftentimes, if people are using TurboTax or just handing things off to their accountant or a tax advisor, they may not necessarily see this form except for when they print it out. But I think it's a good idea to have a general overview of what it looks like. So in the first part up here, you're going to be putting down the address of the property. Now on the Schedule E, you can have up to 3 different properties on it. If you have more than 3 properties, you'll need to file additional Schedule E's to be able to combine them all together. And you're going to put what type of property is, single family, vacation, commercial, whatever the case is. Over to the right, how many days it was rented out at fair market value. Typically, it's just 365 days. In my opinion, is even if it wasn't rented out, maybe there was a period of vacancy, the idea is that it was being advertised or it was ready as a rental. So anyway, getting down into the kind of the meat of the form here. So line 3, the rents received, that is going to be the number that is reflected on the 1099 miscellaneous form. It should also be the same number that is on your income statement as the total gross income. So again, it's important that that is the number that gets input here, not necessarily the number that you may have on your own records. As I explained in a previous video, what you have recorded as to when you received the money may be different from the 1099 as to when we received the money. So again, line 3 is going to be important to use the 1099 box number 1 rent money collected on here. So going down into the expenses section, there's a few sections that we will have the information from the income statement that we'll provide to you that you'll be able to fill out here. The rest of it is really information that you're going to need. So number 10 here, legal and other professional fees. Normally, the only time we're going to provide any kind of column, any kind of number with that is perhaps if we had to file for an eviction, or perhaps we may, if we're mowing the lawn or something like that, or we have to hire somebody to do something that falls under professional fees, then you'll have a separate line item for that. But normally that's not too frequent. Then number 11, management fees. Of course, we'll provide you with that as an expense on your income statement. Then going down to number 14, repairs. Again, as long as we're keeping track of the repairs and we know the expenses and the cost of everything, that'll be reflected on your income statement. And then going down to 17, utilities. As long as we're keeping track of that, you'll have that information on your income statement as well. Now, the columns that you may use, that you may be tracking, auto and travel. Again, maybe not, but depending on how much you want to try to squeeze out of the rental unit, if you're driving up from time to time to check on the rental unit, perhaps even if you're driving up to stop by my office here to do some paperwork or something like that, I would think that that would qualify as auto and travel, so you'd be able to deduct the mileage or however you want to do it for that, but that's not going to be very common. Going down to number 10, again, legal and professional fees. Perhaps you needed to consult with an attorney. Perhaps with your accountant is charging per page to prepare your taxes, and they're charging a set amount to prepare this page for this rental property. That's something you would likely include on number 10. Number 12, mortgage interest paid to banks. That's going to be any mortgage interest that's paid that probably you've received a Form 1098 for. And yeah, you would have the information for that. We don't pay the mortgages, we don't pay the taxes, and we don't pay the insurance. So you would have the information of that. Oh, and I also skipped number 9, insurance. Again, you'd have the information for that. Other interest, Yeah, the only other time you're really going to have other interest is maybe if you're borrowing from a credit card to do repairs on a property, or um, maybe you've got a private lender, a hard money lender, or something like that. But that might go under other interest. Again, taxes, that's something that you would keep track of. They may be escrowed, you may pay them separately, but that would be up to you to keep track of. So anyway, I've put together a sample Schedule E here. So the total rents received is 13,000, and I'm going off of the video that I just done for the 1099. So in this case, we're saying that the total rents was actually 12,000, but $1,000 was paid by the tenant in utilities. So the gross rent is 13,000. But you'll see down here, line 17, utilities, there's $1,000 in utilities. So it's kind of a wash there. We're going down, so insurance, we'll say it's $350, management fee, 910, mortgage interest, 3,100. Repairs, it's a pretty decent year. Nothing real major came up. Maybe a furnace preventive maintenance, maybe just taking care of a few little odds and ends, but no real major repairs this year. $600. Taxes 2,700, and utilities 1,000. Now depreciation, that's kind of the golden goose of real estate. This is why people get into real estate to begin with, really. Now tax laws have changed over the years, particularly in 1986. Prior to that, it used to be that high earning professionals could shelter all their W-2 income by buying investment real estate. And the tax laws changed. That's no longer the case. So, but real estate is still a good investment overall, in my opinion. It just depends on the amount of time that you are spending focused on it, I guess. That depends on how much of a loss you can carry over to your other income. But in this case, we're saying $3,000 for depreciation for the year. So your total expenses come out to 11,660. Now subtract that from the total rents of 13,000, and you come up with 1,340. So if this is your only property, 1340. Again, we see that carried down into line 24 here. 1340. That's going to be what's transferred over to your schedule or your form 1040 to report as income. So keep in mind that this depreciation, $3,000, this was a non-cash deduction. You didn't have to pay anything for it. Um, that's one of the benefits of owning real estate. So, that $3,000, whatever your tax bracket is that's basically how much you're saving in taxes, for the year. But again, this was just a quick overview of the Schedule E, as to what it is, how it gets filled out. As always, if you have any questions, feel free to give us a call here. Thank you.